All right. All right. Good morning, good afternoon, good evening to everyone. We're gonna begin soon. So if you cannot see the display, whether are you on Zoom or are you on stream, feel free to put it in the comments section so that I can rectify that issue, right? Otherwise, we'll just begin. So as always, today's session is a 30-minute session. My name is Sherman, and I'm the FX strategist. And this webinar is in collaboration with Vantage. And today we're going to look at pound dollar. So today is somewhat special because it's at the start of the month. So we can sort of look at the monthly outlook before diving into how we're going to trade tonight's FOMC. Right, so my background is in algorithmic trading. So a lot of the concepts that I'll be going through will be very much systematic. So if you have any questions regarding how you can actually apply the concepts in today's session in an automated fashion by coding out the strategy, feel free to drop your questions on my LinkedIn and I will get back to you guys. So before we begin, I want to set out this disclaimer that trading is a high risk operation. So do ensure that you get sufficient advice before you trade and only trade the monies that you can afford to lose. Okay, without further ado, I'll just jump into the charts and then we can look at the live analysis. Right, okay, new share. So I'm going to show my trading view. If you're not seeing trading view on the screen, just sound it off so that I can adjust it. Okay, if you have any questions on the analysis today, feel free to put it in the Q&A section and I will go through them. Okay, so today's analysis would be on pound dollar. Let's go to pound dollar. Okay, and because today we are at the start of the month, we're going to go through the monthly analysis for this. Okay, so the tool of choice that I'm using is TradingView, and the indicator of choice under indicators, I am using the pivot points. As you can see, you have multiple pivot point indicators here. The one I'm using is the Wayne pivots. Okay, because this has the target areas highlighted for you, so it's easier for us to actually trade with this particular pivot. So once you have added the pivot points to the chart, okay, we can go up. We usually do the analysis from the higher time frame down to the lower time frame. So on the chart, I can set it to 4 hours, and on the pivot points, I'm going to set it to monthly. Okay, how am I going to do that? Is if you go to the pivot points over above it, on the settings cog, click on it. Under time frame, set it to 1 month. And basically the pivot points will be the points designated for the upcoming month, whereas the candlestick charts will be the ones for at a 4-hour time frame. Okay, so I'll just briefly go through how we are using the pivot points. Okay, the pivot points are basically 9 different levels that are projected based on the previous period's open, high, low, close. Okay, so if we're on the monthly time frame, right, this month's pivot points were based off last month's open, high, low, and the close of last month. Okay, so if you have a ranging month, last month, you see that your pivot points, the range of your pivot points will be smaller. Likewise, if it's bigger, there's a larger range. Likewise, the projected pivot points will be wider. Okay, the most important line is the pivot point. That's the middle line, and above it there'll be 2 important lines called the R1 and R2, resistance 1 and resistance 2. And basically on the oh wait, some of you can't see. Hello, are you guys able to see this now? Oh, okay. Can you guys see the screen? Oh, there's something wrong with the screen. No worries. Let me just rectify this. No issues on Zoom, right? Zoom should be able to see the screen. Yeah, I think there's some issues with the stream. Yeah, just continue. Okay, so you have two resistance lines above the pivot line, R1 and R2. And then you have two support lines, S1 and S2 below your pivot point. And in between each line, there is a middle line, M1, M2, M3, and M4. Okay. So how do we actually use the pivot points? The pivot points are basically a range in which we believe that price will fall within the normal range. So for example, given the price range of the previous month, we expect price to fall within R2 and S2. Okay. But before we start trading, we will need to be able to identify the trend. And how we do that is that when prices fall above R2, so if prices is able to make a close above R2, that's usually a bullish narrative. And then if prices fall below S2, then that's a bearish narrative. So from the monthly time frame, right, sometime in September, we could identify this zone as a resistance zone due to the fact that prices were supposed to fall within this range and bounce back up, but it break through down and close below this level. So this would be our monthly resistance for now. And because of this this monthly resistance, let's put M for month. Because of this monthly resistance, we are looking for sells only. Okay. And given that this entire month was ranging, we can see that this resistance zone is actually forming the target zone for this month. So a quick understanding of how we trade the start of the month to our target areas. If price stays within M2 to pivot, this is the zone for us to actually buy. Okay, this is our buy zone. I'm just gonna remove this background. Buy zone, I'm gonna keep it to green, and I'm gonna extend it right. Okay, so this is usually our buy zone, and if prices hits M3, this is usually our sell zone. Okay, so ideally, if we are on a bearish narrative, what we want to do is price to move up to M3, and our target is M1 to S2. Okay, and if we want price, if we believe that prices are going back to these resistance zones before selling off, then what we will expect is prices to hit this level and then move up here. Okay, so this is the bullish narrative. So this is the entry for the month, and this is the target for the buyers. This is the entry for the sellers, and this will be the target for them. Okay. Given that we are in a bearish narrative and there is an FOMC tonight, the chances of us getting the here will be higher than moving to that level. So potentially price would break, if price breaks below M2, then this zone will become a resistance zone and we'll tap it and follow the plan down to the target sell zone. Okay, this is a high-level monthly outlook. Okay, so the monthly outlook is that our target is somewhat in the middle here. So if we draw this line here, this is our target zone for this month. Okay, so this level here, 1.1907, that would be the level to target for this month. And the above here would be 1.2417, which is our target for the buys up to this zone before retracing. Okay, again, this is the monthly outlook. So for us to actually trade the upcoming session, we will need to drill down to the low time frames. Okay, so let's take a look at the weekly. We still have some time to go down each period. So if you go down to the weekly, right, we're in the middle of the week. Right, let's draw this a little bit clearer. This is the start of the month, 31st October. Okay, but we're ranging around this area here. Same thing on the weekly, you get the same points, but these points are determined by what happened last week, right? What we have done just previously was based on the points that were the open, high, low, and close data points of last month, whereas these 9 lines are based on what happened last week. Okay, so same thing, maybe just a rough run through. We started the week here, right? It broke below. This was the buy zone, right? And the target was this, right? So we have achieved the target early in the week, and then it retraces back to the pivot, breakdown, and now we are cycling around M2 to M3. So what do we need to do again? We need to identify the weekly trend. Okay, so again, more recently, this is the monthly trend. This would be the weekly break. Okay, what do I mean by the weekly break? The weekly break is that prices were supposed to reach this area, bounce back up, but sellers managed to push the price down below it, and you can see that the this area here would be prices will tend to react around this area as a point of interest. So we do have to be wary of this area again. So if prices were to come to this area, it has been tested 3 times. We form a couple of bottoms here. So there might be a chance that we might break through this level to attain our monthly level. Okay. So despite it being bullish, right? Despite the monthly narrative being bearish, right? We need to identify areas where we can be bearish. So this level here is our first level, and this is our second level. Okay. And if you look at the range here, the range being from this area down to this level, right, we are down in the discounted level, right, which is not a very good price to be selling. Okay, so we'll be looking for sells here and then sells here. And again, for us to actually get to these 2 levels, we will need to be bullish in the short term to attain these levels before we can sell off. Okay. So even though it looks like a low probability trade to buy at this level, but given the fact that if you were to sell only in the premium zones, which is this level and this level, we will need price to move up to these levels before we can start selling. Okay, so again, this is the monthly buy zone. It coincides with our M2 weekly buy zone. And so I think the immediate target would be on the weekly time frame, okay? M2, we will try and target M4. So what does this mean, right? So this means that if it breaks below M2 today, breaks below M2, right? The chances of us doing this is extremely high. Okay. But again, we do not want to sell unless we can break the previous low, at least this couple of lows here. So if we draw this line here, these are where we have stop losses placed. So if price were to hit this level, we will be able to trigger a lot of sell market orders for price to break below, and we will have to wait for the retest to this M2 level before selling down to this. Again, this will be our confirmation before we can actually sell. But if you were to be given a choice on what to do now, the high probability trade would be to buy in this area. Because of all the buyers in this area, we need sellers to break through to down to this sell side liquidity before we can actually retest this level and make it down to our monthly level. Okay. So again, this would be a short-term trade. This would probably be this week's trade. Right, and we can quickly reach the monthly target before the end of this week, which means that the second, third, and fourth week of November will be very bullish. Okay. So this is what we have on the weekly. Let's go down to the daily. Okay, daily is much so for daily, so right here now, the daily, we would see that prices have broken below M2. So when price breaks below M2, what happens is that we are in a very bearish, we are bearish on the day. Okay, so it's more likely that this red line would play out as compared to the blue line. Okay, so what can we expect from here is that because of this break of M2, and now we have retested M2, for us to be bearish on the day and the weekly and the monthly, this is the area to break. Okay, which coincides with our sell side liquidity, our plan for the week, and for us to actually close below M1 and between M1 and S2 tonight, right? If price were to get to this level, then we are bearish. This will set up this entire area, this area here. Again, we have to close the day by New York close. Prices have to break below this level. We come back up, we retest this level before we sell and target our monthly level at this area here. So I'm just going to mark it here, 1.1908. That is our monthly target. Okay, so they for us to actually play out the weekly and monthly plan, our daily is bearish tonight. So we have to break below this level. And let me just draw the levels here so that we can see on the screen. 1.2084, break below this level, retest, and then we can go down further. Okay. So this is the plan for that coincides with our weekly and monthly. So we want that. And again, it's because of the higher time frame narrative, it's safer to sell than to buy in this scenario. Okay, here we have the sell side liquidity on the higher time frame. We can also see this trend line formation here. Okay, we can just do this. And how do we actually determine this, all this liquidity, right? All this liquidity, you can use something called fractals, and fractals basically points out areas where there was a sharp tap to a certain price point and it rejected that level, right? That's usually that happens when there are limit orders secured around this area, and once prices tap into that it forms a resistance. So every sell order is met with a buy order. And once the buy order overwhelms the sell order, and your sell orders, there's a lack of sell orders, that's where price will push up. Okay, so what this means is that this limit orders with their stop losses will be falling below this level here. And once, if we were to be able to trigger the stop losses, then prices will move in a very smooth manner downward. Okay, so let's drill down to the 4 hours and see how we can actually plan the move for the next 4 hours. Okay, again, Asian session for pound dollar, euro pound, right? You see that prices tend to hit the target areas and they move back up. They tend to hit the target area and then they move down, and then they hit the target area and then they move back up again. Okay, so these are characteristics of euro pound with dollar. So ideally, we see this level here. So on the 4 hours, we have this R2 M4 formation here. We have not, these lines are projected, they are not confirmed yet. It's only confirmed at the end of the hour. So once we hit 9 o'clock, these lines will be projected. And this area here coincides with the highest point of the day today, right? So this was our high. What could happen is that we have to maintain above the pivot point at the start of the hour, right? We might tap down below the pivot point, try and get this high taken up, right? Sweep it before moving down to our target zone. And again, this might not take place because of the news later, so there might not be any sort of movement that we can see that is so drastic, right? The big move will be probably during the interest rates announcement. But if price were to reach this area, right, what I'll be looking for would be for it to break above, which is around the middle point of this area here, right? So if you were to zoom in, this is what it would look like. So down to M2, up to this level, we can take some liquidity. Usually you'll do this. You'll break below, take some liquidity, bounce back up, and we take this level again down. So we need a formation like this where it hits our target zone, right? Sweep off that liquidity, make a lower low, and we take the 618 Fibonacci or 50% discount, 50% premium to sell off at this level. And the target would be M1S2. Again, these are not projected yet, so these numbers would change, but this is usually the plan that we are looking for. Okay, for us to be bullish, okay, one of you guys would ask, for us to be bullish, what would happen? Okay, so when we're looking for the high probability setup, we usually start from the higher time frame and we drill it down all the way to the 4 hours or the 1 hour. But when we're looking for the alternative, then we'll need to start from the lower time frame up to the higher time frame. Okay, so what do I mean by that? So if you were to use the 4 hours as a starting point, okay, for us to be bullish, and I'm going to change this to blue in a moment. For us to be bullish on the daily, the weekly, and the monthly, what we need to do is we need to break the R2 of the 4 hours first. So if it goes to M2, we will need it to break above R2, tap into this area again, and bounce up higher. Okay, that is the first step. That is the first indication of a bullish move. Okay, so as we move up, okay, this has to be done in within the period. So this blue move is what we needed to do in the 4 hour time frame. Okay, next, for us to be bullish on the daily, it cannot stop here, because if it stops here, it's still falling within the range of the bearish narrative. We need prices to break above by the end of today, and continue higher. Okay. And so if you can achieve this, if you can break the R2 for today, which is at 2237, then once our daily has been cleared, then we look at the weekly. So once we cleared the daily, we have Thursday and Friday to break above this level before we become bullish again. And by the end of this week, if we are at this level, then the entire narrative will change from bearish to bullish. And next week's analysis will all be top down from weekly, because it has broken this level. We'll start from a bullish narrative and we drew it down to the 4 hours. Okay, so let me just repeat myself again. For the high probability setup, right, we always look from the higher time frame to the lower time frame. Okay, so we start from the weekly and then we draw it down all the way to the 4 hours or 1 hour. Okay, and if we want to look for a reversal, we will need to start off from the lower time frame. It has to break the levels on the 4 hours, and once it has broken the levels on the 4 hours, then we look on the daily, and then we move it on to the weekly. And once we are done with the weekly, then the entire narrative will start to change again. Okay, so this might just be our reversal zone, right? But for this to be a reversal zone, it takes some time for us to actually get up to this level. Okay. Do you guys have any questions on what I've just mentioned? Right. So don't be confused with this is the alternative. The bullish move is the alternative. How do we get to a bullish reversal? This is the alternative. But if you stick to the bearish momentum that we have seen from the top-down approach, weekly we are bearish, right? All the way down to our 4 hours. How do we get into that bearish entries, right? So yes, so you only start from the lower time frame, 4 hours, all the way to the weekly, when you're looking for a reversal. Okay, when you're not following the trend. Okay, so if you're following the trend, you always start from the higher time frame, which is the monthly, all the way down to the 4 hourly. Okay, so the red lines here would be the ideal for us to sell. Again, this is the daily high. We want to sweep that daily high, get into this zone. And what is this zone, right? This zone is the 4 hours. Oh, it's shifted a little bit. This zone is the 4 hours target for our buyers, our short-term buyers. And so once we get into this area, we can expect all our buyers to exit the market and sellers to re-enter, because of this zone being the premium zone to sell. Okay. So again, for us to actually drill it down on the 5 minutes, on the 1 minute, this is the kind of pattern that we're looking for. Once it gets in, do not sell anywhere below this level, right? These are all noise. Once it hits this level, we will see a reaction, right? There can only be two kind of reaction, okay? One reaction is that it rejects, breaks lower, and then it goes down lower. The second reaction is once it comes into this level, right? Once it comes into this level, there is no second guessing about the price breaking above, right? It has to be a clear close above, and that's where we'll start to look at a bullish reversal. Otherwise, if it comes to here, it makes, so for example, like this, you see, when it comes to this level, it rejects, it comes back up again, and then comes down. And once it comes down, we will target the middle point of this level to sell down. Okay. What is a clear cut break below? So something like that. See, once it reached to the last few minutes of the 4 hours, right, there isn't a sort of M-shaped pattern that is being formed. Therefore, that you can't sell at this level. Okay. Once again, this is the middle of the session. within this 4 hours block, we saw this rejection, right? And then retap and then comes down again. Of course, the best would be that it comes down, we tap into this zone, and then for us to sell. But otherwise, you will need to go down to the lower time frames, say a minute, and try and look for an entry where you have this sort of break of structure, right? See, this was the last low creating that higher high. Maybe this was the wick, right? And the next one, what we would have expected for a bullish move is for it to stay above the previous low before moving up, but it broke this structure. Okay, so once it breaks this structure, like there's a change of character, right? Then basically you know that this is the end of where the buyers are, and any buyers above this level are all trapped. And what we are expecting is for price to return to this level at least, right? Return to this level, form a lower low, and because this will form the new resistance, and then you take this downwards. Okay, you wouldn't have taken this first entry if you were conservative, right? And this is a little too short a distance to determine whether or not this could be a start or sell entry. But this break of structure gives us a good zone for us to actually start buying. Okay. But all of this, the key thing for us here would be to find that trigger, which is this area here. And once prices have reacted in this area, that's where we start to find this lower low. And if you were to follow the strategy, right, the strategy would be this would be your entry. You can do a stop loss above here, but your target, because this was still within the same block, your target would be somewhere around the middle of this line. Okay, so this would have been the entry for the trade here. Okay, of course, if you are following the following 4 hours, then you'll see that your TP would have decreased down to the middle point of the next 4 hours block, which is around here. Okay, so the next 4 hour block is around here. And so once it reacted to this level, there was a sort of range from there. So that's kind of like the idea for pound dollar. We would expect something to be like that as well. So just now we saw a huge so now we are still settling the move here, right? So the idea here is that if price can break below S2 in 30 minutes, then this would be our new resistance zone, and we can sell from there. But otherwise, if price would keep within S2 and R2, then our target would be this block here for the next 4 hours. To take this side of liquidity, right, if you subscribe to ICT, right, this build up of so since the start of the day, 4 o'clock, start of London session, right, double top form, and every time it formed a lower low, there were new sellers coming in, stop loss above, come up to this level, stop loss above, come down to this level, stop loss above. So if you can break maybe this high or this high, you can trigger a series of stop losses up to our target area. Okay. But this buying up is a high risk move. This selling is the low risk move. Okay. So that's all I have for today. If you guys have any questions, feel free to put it send me those questions on LinkedIn. I'll try and answer them. Otherwise, there'll be a session tomorrow and on Friday again, and we will revisit all of this just to see how we can actually improve the setup for the week as well as the coming month. Okay, so all the best to your trading. Stay safe, and we will see you again on the next session. All right. Thank you, guys.